Hello traders, and thank you for stopping by to watch this video analysis. I am a swing trader using only supply and demand and price action to implement my multi-day or even multi-week swing trades. I believe in this way of trading because I want to trade in the direction of the big institutions, big banks, and hedge funds because they are the ones moving the markets. I want to identify where and when the market is most plausible to reverse to either the upside or the downside. These big institutions are leaving their large footprints where they placed their orders, and we are going to locate their unfilled orders left on the charts and trade with them. Let's go. Hello swing trading family, I hope you're all doing well. I would like to wish everyone a good day and a good rest of the week. In this video, we're going to analyze American stock MU or Micron Technology. They make chips for other companies like Apple, Microsoft, and Google. This is the weekly chart. This is the weekly chart. This is the monthly chart down here on the bottom right. And this is a 3-month chart, much longer time frames. So the question today is, are we going to see a bounce at this level down here on the weekly? This level here. Draw a demand zone down here. We're looking to go long down here, but let's do a time frame analysis first. We see that on the 3-month chart there's a huge level of supply zone back in 2000 that it's respecting. That's why price is failing to go above it. That's why price is that's why it's pulling back right here. But we can see that there's a demand zone right here that's holding current prices right now. And same with the monthly chart. We're seeing that price is respecting these levels right here. So price dropped down to this level and then rallied, but then now it's dropping back again to this area. So on the weekly chart, we can see that price is respecting this level again. Let me draw this. Price is respecting this level right here. It respected this level right here and then it rallied, but then it was stopped by this level of supply zone and then it's dropped again. But then we see that when it did this, it created this demand zone here that I have right here. And the question is, if it goes down here, is it able to rally back up again to the $44 price range? That's the question. So we can see that it is likely to, but this is where I am planning to go long in this area here, around 3170 to 3160, and putting my stop loss down here at 2837. And this is for a long-term swing trade. We're holding our positions for weeks at a time. As you can see, each of these candles is 1 week. But if you prefer to swing trade only for per day or only for a few weeks and not a few months, then you can go down and look at the daily chart here. And we can see that the demand zone here is pretty good as well. Maybe you got to go lower. When you go on the smaller time frames, your risk to reward is going to be smaller because your base is going to be smaller than on a weekly chart or on a monthly chart. So you can see that the weekly chart, my base was $31, around $31.60 or $31.70 up here, and on the daily it's $30.29, and still putting your stop loss around $28.40 here. So if you notice on the weekly, we're taking a bigger, we're basically giving it more room to work. We're giving it room to work down here in this base. So essentially on the weekly, we're giving it time to work on this demand zone and also down here. So we're using this whole range on the weekly, but on the daily we're only using this demand zone. We're only using this demand zone here. So if price penetrates the weekly into here, then our daily demand zone will get triggered and we will go long down here. But sometimes, or I should say most of the time, supply and demand it doesn't only work on the higher time frames, but it's more likely to work on the higher time frames. That's where big hedge funds and institutional traders are building their positions by selling into longer time frames, taking a couple of days, couple of weeks, or even months to build their positions. For example, on the 3 months chart, back in 2016, they've been slowly building their position for the whole year, basically, to go up here and then sell it. So you could see each of these candles a 3 month candle, and they're taking many years, even, or 2 years even, to build up their position up here before just to crash it down again. So that's just goes to show that bigger institutions and bank traders and hedge fund managers, they're all taking long-term positions to build their positions. On the daily chart, you can see that on the daily you can see big buys, big positions, buying and selling. But if you look at the overall bigger picture, you can see that overall they're actually increasing their positions as people sell. They're buying, keep on buying up here. So that's something I wanted to point out. But you can see that if price goes down here, then we want to be buying down here. At least I will be having a stop loss, or not on the daily. I'm going to be buying on the weekly, but if you do trade the daily, that's where your levels should be. But for me, I'm going to risk a little bit more at 30.60, 30.55, and putting my stop loss at 28.39, and my take profit should be at least 42, to $43 up here. And if it's a loss, it's a loss. If it makes profit, it's gonna be a 3-to-1 profit. So risking this amount to make up here, risking a small amount to make a 3-to-1 profit. So I'm okay with that. If I lose, hey, losing is part of trading. You should be patient, and that's why we're implementing our risk to reward profile, managing our risk, only risking enough to make 3 times as much. And so we'll keep you updated on this trade, If it works, then I'll post it. If it doesn't work, I'll post it too, because like I said earlier, trading is not always about winning. It's about losing too, but we'll have to see. We could trade alongside the banks and institutional traders by using this method, and we want to buy as low as possible and sell when it goes to retail prices. Alright, trading family, thank you so much for watching. I appreciate you guys watching, taking the time out of your schedule to watch this analysis. If you're curious about MU stock or Micron stock, then take a look at this video, and hopefully it will give you some insight on whether or not it's going to continue crashing or if it's potentially going to bounce from here. Thank you. Have a great day. Thank you so much, traders, for taking the time to view this video. If you like this video, please hit the thumbs up button, and if you want to see more, please don't forget to hit the subscribe button and the bell notification so you don't miss any new videos that I upload in the future. Thank you and have a great day.